Are you losing money day trading? I want to teach you a strategy that you can apply immediately and improve your day trading drastically. I'm Juan. I've been trading for over a decade, went back to school to become a financial analyst, and I want to make trading and investing easy for you. So the trading strategy is called the PreMarket Breakout. And I'm going to teach you what it is and the conditions that I apply to improve your chances of success. So if we go on Finviz and we just pick some of the top gainers up here, we'll start with AGRI. So let's look at AGRI and let's talk about what exactly is the PreMarket Breakout. So for the PreMarket Breakout, I like to see an uptrend pre-market. I don't want to see it retrace over 60 to 70%. So how do we know that? If we get the Fibonacci retracement, here's where the spike started, go up to the high, and we see here that it didn't retrace here below between 61 and 78%. So that's the first condition. You hit here, it tapped here. So we'll build a line there, and then it bounced off of this area. This is the pre-market channel. Spiked up here, bounced here, went up, spiked on it again. Weakness, broke it briefly, then retraced. Quick break here, came back, almost tested it. And then this is where the big entry is. This is where you would enter. And I'll explain why you wouldn't enter here and conditions for a proper entry. So we see here, it broke to 30 and continued all the way to a high of $5. Big potential for profit. Let's look at another ticker, ENSV. Spiked up here, tap, tap, came down. So I would say somewhere here would be the best resistance, and here bounced a few times here would be support. So we have here, broke here at 420 and high of 480. Good opportunity for money. And we take another look here, EBIX, tapped here a few times and the low here. So we see it drop, started to spike up here, broke out over here and continued uptrend. Another ticker here, HYMC, tapped here a few times, broke it briefly here, then it just crashed all day. And then we see here, tested it perfectly again. On this one, you see it tested it perfectly here. Some people jumped in early, it didn't actually break it and pulled back all the way down here. Then here, broke it here, some confirmation candles, and the uptrend continued after that. You see here the potential to make money was quite high. So let's go over what the conditions are to enter a pre-market breakout. The first condition is volume. We want to make sure that there's higher volume. Volume is crucial for every type of breakout as it confirms the breakout before entry. Without volume, you have the potential of having a fake out. So let's look at the example here that we mentioned on this ticker HYMC. We didn't get in here. It was only 2 bars and it was the first few minutes of the market, and I usually like to wait at least 10-15 minutes before trading anyways. The volume was a little bit higher because a lot of people usually take their profits in the early market. But now look at the difference here during the other breakout. You see the uptrend here on the volume. The volume is increasing. You see here it's testing, pulled back a little bit. This would be a great entry here. More volume increasing. We have this candle here, thin body, which usually represents a trend reversal. So we see here we have good volume increasing. That's the first condition. If we look at this ticker here, some people got in here thinking it was going to break, but look how low the volume is. Volume is all the way down here and it pulled back quite a bit. Same thing here. Look at here. This tested this area here, but look at the volume. Low, lower volume, and then selling. As opposed to look at the difference with this volume versus this volume. Or even here, some high volume, but it's the first few minutes and then a quick sell off. So remember, when trading, volumes are low. There isn't enough pressure to push the market to new highs or lows. Next thing is trend line. I like to see that there's an uptrend. Trend lines are one of the basic components in price action. Again, same ticker. Look at the trend line. It's on an upward trend here. So it's holding the trend here. It's starting to do an upper trend, pulled back a little bit, upper trend. So we want to make sure that the stock is also moving in our trend. So we have an increase in volume. It's on an uptrend and it broke out pre-market high here. Next, we want to see simple moving average and the VWAP. We see in this area, so this blue line is the 20, the red is the 9, and the orange is the VWAP. It's above the 9, it's above the 20, and this yellow line is above the VWAP, and it went on its uptrend. Same thing here. We see here that it broke above the 9, above the 20, and it kind of held above the 9 here, kind of guided you when to start exiting. You want to see those conditions. You want to see volume increasing. You don't want to trade the first 10, 15, 20 minutes. Wait till institutional people sell off, people taking profits. Let that play out. But once, if you have this, you can easily set an alert. You can just easily just right click, add an alert, put the price. So if you want to put like value price at 85 cents or 82 cents, and then you'll get an alert once it hits 82 cents. So you get an alert here and you're watching it and you see that it didn't break out. You see there's not a lot of volume. And then here you get another alert. It tapped this 82 cents, but it didn't break it. Look at this volume, how low it is. So you don't jump in, then you forget about it. You're looking at other things. Here at 80 cents, right here, you get another alert. You're seeing the volume increasing. You're seeing the volume increasing. You're seeing the volume increasing. Tapped it, pulled back a little bit. Right here, you see it breaking above the 9. It's on an uptrend, a lot more volume. And then here in this candle, you should feel more comfortable jumping in for a position. Now, you jump in here, 83 cents. Your stop can be 81 cents, 80, like below the trend and below the moving average here. So it's a low risk. In conclusion, pre-market breakout are basically setting the support, resistance, market opens. When it breaks out the resistance during the opening hours, volume is crucial when trading these pre-market breakouts because it can help with false signals. Some of the successful pre-market breakout trading strategies include pairing with the volume following indicators. Volume, we talked about volume. We want to see increased volume. Trend lines, we want to make sure that our stock is in an uptrend, and we want to see that this stock is above the VWAP and the simple moving average. That was just a quick tutorial. If you enjoyed that video, we have another video that talks about setting your support and resistance, which is also extremely important. You can have past support, past resistance to make your strategy even stronger. You'll have a better advantage of when to enter the trade and when to exit the trade. Thank you for watching. See you on the next video.